Hello, everyone. I hope this note finds you well. I know we live in interesting and difficult times. Just wanted to thank you for the trust and confidence that you placed in us and also give you a market update. I wanted to share with you this. You'll have this in longer form to review. Let me share this with you now. Some highlights of our market update that you can go through in more detail. From an office standpoint, we're still working remote and in the office and still seeing clients by way of phone and Zoom meetings. From a market standpoint, this year has been wildly volatile. We saw the fastest drop ever from February 19th to March 23rd, where it took only 22 trading days for the S&P to fall 30%. And then August 18th, we were back to all-time highs, kind of notching the quickest recovery out of a bear market. So we saw both the quickest into and out of a bear market that we've ever seen. The most recent rebalance you saw in advisory accounts was in September, where based on market growth, we had become overweight to equities. And so in large measure, what we did in September was take that equity weight back to target. Now, you'll be seeing an upcoming quarterly rebalance. I want to speak to some of the themes that we'll be addressing then. There is an elevated event risk in the back half of the year with elections and continuing both economic and health results of COVID. So these are some of the things that we'll be addressing by way of the quarterly rebalance. We're going to bring back equity to target. We're going to be reducing our domestic small cap exposure, which we began building a position in July. That's done really well, but that's more aggressive and more volatile. So we're going to be reducing that position. We're going to be increasing our weights to what we think are more COVID resistant areas in large cap US stocks. We're going to add to our tech and healthcare exposure through IWB, which has about 40% in healthcare and technology. Reduce slightly developed international in favor of emerging markets. And we're going to add MBS or mortgage-backed securities for part of the bond fixed income part of your allocation. Another couple of pieces I wanted to share with you are these. Move on to the next piece here, which is just, this is going to speak to how volatile it's been so far this year. In 2019, there were 7 trading days where the S&P went up more than 2%. We're on pace for 76 of those days this year. One of the things that you hear a lot about is the fact that the growth in markets, it's concentrated to mega cap US and technology within that mega cap US. On this right side, I know it's a little bit hard to see, but hopefully I'll explain this in a way that makes sense, which is that the tech bubble peak, the S&P weight to technology was 33%. And underneath that number, you see the earnings per share contribution of tech within the S&P 500 at only 16. So the price compared to the EPS, there was a disconnect there. So today, what are those numbers and how do they compare? Today, the weight in the S&P 500 is 28, but their EPS contribution is 23. So the price versus the EPS contribution isn't nearly as disconnected as it was at the top of the tech bubble. Another couple pieces, you probably know there's an election coming up in about 3 weeks. This just speaks to historically from 26 through the end of 19, kind of what happens in all years on average in the S&P. Election years, you see are a little bit higher at 11.3. Midterms are actually the lowest of the 4 at only 8.6, and non-election years at 14.3. And then I know a lot of people are thinking about a close election here in a few weeks and are thinking back to what happened with Bush v. Gore in 2000. This is how the markets responded prior, during the contested period, and 1 month later. So prior to the election, markets were down about 1.5 points. During the contested period, which was 11/8 through 12/13 of 2000, markets were down 4.9%, but there were only 4 days during that period of plus minus 2%. And then 1 month later, 12/14 of 2000 through January 13th of 2001, markets were down 3%. So a contested election is a possibility. We think ultimately, as this slide indicates, markets do different things during different election cycles, but long-term markets go up with whether it's Democrat or Republican at the presidency, the House, or the Senate. So we do think that there is a chance for some increased volatility in the short run, but we don't think anchoring to who wins as a financial market forecast is the right approach. So I just want to, again, thank you for the trust and confidence that you placed in us. Again, I know that this is a difficult time for many. Please let us know if there's anything that we can do to serve you better. Any questions that you may have about this market update or anything else, please reach out to us. We hope to gathering again soon in person, but until then, we wish you all the best. Hope that you stay well and take care.